Shopify reported fiscal 2022 third quarter earnings results on the morning of October 27. The stock was up 16% on the day of the release as investors liked what they saw. So let's take a look into Shopify's figures and let's see what got investors so excited about their third quarter results. And the main theme here was the robust revenue growth on the top line. Revenue increased by 22% to 1.3 billion in Q3. This was more of a relief to investors than it was a this was more of a relief rally than it was anything else because e-commerce sales, online sales, of which Shopify depends so largely on, have been decelerating since economies have been gaining reopening momentum in mid to late 2021 and now further expanding in 2022 as consumers are spending more of their money on away from home experiences like restaurants, like travel, like theme parks, like concerts, and so that's leaving less money to spend online, and especially compared to the amount of money they were spending online in the immediate aftermath of the COVID-19 pandemic. So the fact that Shopify was able to increase revenue by 22% despite these headwinds really impressed investors, and that's largely why the stock was up as much as 16% right before I started this video on the day of the release. On the bottom line, Shopify reported a loss per share of 12 cents. This was down from a profit per share or an earnings per share of 90 cents in the same quarter last year. Management has noted that this year will be an investment year and so a transition phase for the business. So this loss was to be expected as the company has been investing in growth. One of those areas that Shopify has been investing in growth has been in expanding its logistics network or fulfillment network. And so it's digesting a $2 billion acquisition of Deliverr. The acquisition closed in July of 2022. It's now digesting this purchase, bringing employees on board, integrating them into the business, and all of the aspects that goes into that. That is raising expenses, but at the same time, it's going to increase its value proposition to merchants because Shopify can now allow merchants on its platform to offer their customers a delivery promise, to say to their customers that we can guarantee delivery in 2 days or in 3 days or in 4 days, whatever it might be. Now, merchants on Shopify's platform can offer that delivery guarantee, which, of course, when you're a shopper and you're shopping for something online, you like to know when that item is going to be delivered, and you would also like to have that item delivered sooner rather than later. So that's the reason why Shopify is investing billions of dollars in rolling out this logistics network so that their merchants on the platform can then offer it to customers. Another impressive metric in its most recent quarter was the 11% increase in gross merchandise volume, up to 46.2 billion on its platform. A part of Shopify's revenue relies on taking a percentage of the sales that happen on its platform, which is called gross merchandise volume. So as gross merchandise volume grows, the percentage of revenue that Shopify derives from that segment increases as well. And again, the reason why this is impressive is because of the changing consumer shopping behavior, spending more on away from home experiences, and the fact that Shopify still increased gross merchandise volume on its platform despite those headwinds is what's impressive. And management is forecasting that the gross merchandise volume will continue to outperform the US retail market in Q4. That's another reason that had investors excited that this momentum will continue to the fourth quarter. This wasn't a one-off thing. And then moving along to cash flow from operations was a negative 392 million for the first 9 months in 2022. This was to be expected. Management forecasted this. This was compared to a positive cash flow from operations from 244 million at the same time the previous year. that said, I will note here that Shopify had 1.4 billion of cash as of September 30th. This was down from 2.2 billion the same time last year. So Shopify has you know, deep pockets here. The losses, the cash flow losses in 2022 are, even if it continues to generate more losses in the final 3 months of the year, let's say at a similar pace, which is about 130 million, that would still leave it with over 1.2 billion of cash on its balance sheet, despite investing aggressively in rolling out its fulfillment network. So for now, liquidity and cash position, not a problem for Shopify. And so these investments are prudent so far for management. They're not going beyond its means. It's not investing too much of its cash balance. And so overall, decent, solid cash management from Shopify. All right, that's all I've got for my Shopify earnings update. Thank you for watching, and I'll see you next time for another installment. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.